Good morning. The regime shift is no longer a probability. It's confirmed. 67% confidence. The S&P 500 closed at 7,458, down 1.01%. The 10-year yield is falling, not because inflation is beaten, but because growth fears are dominating. The VIX at 18.8. The dollar bid. Crypto leaking. This isn't a pullback. This is a regime shift. And historically, this rhymes with August 2024. The yen carry unwind. The VIX spike. The violent unwind of leverage. We're in the middle innings of that same script. Today, we give you the institutional playbook, the regime playbook for every asset class. 3 actionable trade ideas with entry, target, stop, and risk reward. 3 forward scenarios with probabilities and S&P targets. The contrary in case the crowd is missing, and 2 deep dive lenses on today's exact data, macro cycle and microstructure. Let's start with the regime. The evidence is unambiguous. S&P 500 down 1.01%, 10-year yield falling, not on disinflation, but on growth scare. VIX at 18.8. Dollar bid. Bitcoin at 64,714, down 0.2% on the day, lagging Solana and Ethereum. Copper weak. Credit spreads widening. This is the textbook risk-off fingerprint. Now, the historical parallel. August 2024. The yen carry trade unwind. VIX spiked to 65 intraday. The S&P dropped 8% in 3 weeks. We're not there yet. We're mid-stage. The VIX is only 18.8, but the correlation structure is identical. Cross-asset correlations converging to 1. Growth stocks leading down. LCID up 13.9% today on idiosyncratic news, but the broad market down 1%. Bitcoin correlating 0.85 with the Nasdaq. This is the fingerprint. The Fed meets in 8 days, July 29th. FOMC meeting. High impact for crypto, medium for equities, high for bonds. The market is pricing a 95% probability of no change in July, but the September pivot is fully priced. If the Fed pushes back, if Powell says not so fast, the risk-off accelerates. If they validate the pivot, we get a violent snapback rally. That's the binary catalyst 8 days out. Historical parallel, August 2024. The VIX spike didn't end until the Fed signaled emergency readiness. We're not there. We're in the middle innings. The playbook for this regime is clear, and we'll walk every asset class through it. Lens 1, the macro cycle lens. Ray Dalio's framework. Where are we in the debt cycle? Late cycle. Let's not sugarcoat the tape. The 10-year yield is falling because growth fears are trumping inflation fears. The VIX sits at 18.8. The dollar is bid. Gold is bid. Crypto is leaking. This is a regime signal. Our model assigns a 67% probability to a risk-off regime, the highest conviction reading since the August 2024 yen carry trade unwind and VIX spike. We are in the mid-stage of this regime, not the panic, not the recovery, the messy middle. And in the messy middle, allocation beats selection. Today, we give you the institutional playbook for this regime, the asset class playbook, 3 regime-aligned trade setups with defined risk parameters, 3 forward scenarios with probabilities, and the contrarian case that the crowd is missing. Let's go deep. Why 67% risk-off? Look at the cross-asset correlation matrix. The S&P 500 down 1.01% while the 10-year yield falls. That's not inflation fear. That's growth fear. The dollar index is bid. Bitcoin at $64,713 is leaking relative to the dollar. Bitcoin ranked 3rd of 4 majors today. Solana plus 1.4%, Ethereum plus 0.5%, Bitcoin plus 0.05%, BNB down 0.37%. Risk assets are leaking in unison. The dollar is the bid. That is the textbook risk-off fingerprint. The historical rhyme is August 2024. VIX spiked from 15 to 65 in days. We're not there. We are in the mid-stage. The grind lower in equities, the grind lower in yields, the grind higher in the dollar. The VIX at 18.8 is the complacency before the spike zone. The 10-year yield falling on growth fears, not inflation relief, is the tell. The S&P at 7,458. Support at 7,085, minus 5%. Resistance at 7,831, plus 5%. We are in the middle of the range. The regime playbook says, equities underweight, defensives only. Bonds overweight, short duration. Gold overweight. Crypto underweight. Dollar overweight. Commodities neutral to underweight. This content is for educational and entertainment purposes only. It does not constitute financial advice. Always consult a qualified financial advisor before making investment decisions.